Good evening, traders and investors. Will back here with another one, coming to you with a Sunday night video. Hope everybody had a very beautiful weekend. And it's that time of the week again, guys, where we go over the top 5 options plays for the upcoming week. Apologies for the late upload. Was a very busy day for me, so didn't have time to film up until now. So, as they say, guys, I apologize, but better late than never, I assume, right? So, in today's video, guys, for the top 5 options plays, keep in mind that all of these options plays are going to be for selling puts, meaning we are writing puts at designated strike prices in hopes of collecting the premium associated with them. If you don't know what short puts are, guys, they're basically like buy limit orders that pay you. So as an example, let's say we want to buy Amazon at the $180 level by Friday, but we're not sure if it's going to get there or not. Well, we can always set a buy limit order for 100 shares here, but it's not really going to do anything until it gets filled, right? It doesn't really pay us, doesn't really do anything until it gets filled. What we can do instead is write some short puts. If we were to write the 180 strike for Amazon right here by Friday, we would collect $84 for writing that put. It's basically like a buy limit order that pays you. If the stock closes above 180 by Friday, we just get to keep all of the $84. If for whatever reason it ends under 180, well, we still get to keep the $84, but we have to buy 100 shares of Amazon at the designated strike price. And then if ever we are assigned the shares, guys, then the following week, all we're going to do is write covered calls at exactly the same strike price. So hopefully that makes sense, guys. It's part of the larger wheel strategy that I do showcase on the channel. Very, very easy strategy to run, whether you're a beginner, intermediate, or even advanced investor. Very, very high probability win rate strategy, and also a decently, passive strategy as well. It doesn't really require a lot of account management once the positions are open. So in terms of today's video, guys, we're going to take care of a few of a little preview into this week's markets and see if there's any major market moving events. Then we're going to take a look, guys, at a bit of the strategy rules very, very quickly. Thereafter, go over the top 5 plays of last week, say how those performed, and to conclude, obviously, the top 5 plays of this week. So without further ado, guys, let's get right into today's video. Bit of context now for the upcoming week in the markets. Well, obviously, guys, the bulls are still in a very, very healthy daily uptrend right now, right? It looks very, very good for the bulls. And even if we were to fall back a little bit here, we do have a lot of support in our prior all-time highs, which could lead us in to just hunting for a little bit of a weekly higher low for some further trend continuation. So in terms of the technicals, guys, the bulls do have a lot of space before the line in the sand levels down here, and I do think they should be able to hold these throughout the week. So no real jeopardy, in my opinion, of really having a big flush. Now, that is predicated on these 2 data releases that come out on Wednesday, guys. It's going to be a very, very heavy week. Now, on Wednesday, we have 2 very large market moving events. Number 1 is going to be CPI, coming in with an expectation of 3.4% year over year. Obviously, if we get anything hotter than this, guys, the markets are definitely not going to like it. But if ever we come in line or a bit lighter than expected, it should be a very positive event for the markets. Couple that with the fact that the very same day, a bit later on in the day, we have Jerome Powell coming out with an interest rate decision. Now, the expectation is not to change interest rates right now. All the focus is going to be on his rhetoric. What is he going to say in terms of the status of the economy, the jobs market, and when does he potentially forecast seeing the Federal Reserve's need to bring down interest rates later on in the year. So if these 2 events are fairly good for the markets shouldn't really have much downside. However, if CPI comes in worse than expected and Jerome Powell hints about maybe cracks in the economy or something, or some red flags that they're showing, that will be bringing it down as well. Now, in terms of last Federal Reserve meeting, he didn't really say that he saw much in terms of red flags. He said that the economy was strong, the jobs market was still strong, and that inflation was still coming down, although on a bumpy road, right? So very, very volatile week for the markets, especially on the Wednesday. So this week's plays, guys, we really have to focus on high quality companies, and more specifically, companies that maybe are not so interest rate sensitive. So I probably won't be playing any EV trades such as Tesla this week, any solar trades, and maybe even some financials because they're so heavily affected by any movements in interest rates, right? So we really want to try and play some sectors that are less affected by interest rates, even though these will be broad market moving events, right? We just want to go with the stocks that we could be most protected in. So As well, we do have a couple big earnings this week. We have Oracle on Tuesday after the close. Wednesday, we have Broadcom, so that could potentially impact some semiconductor plays, but the expectations for Broadcom's earnings are supposed to be fairly bullish. We're really not expecting any big beat or any big miss to the downside. It's a very consistent company. It's not really known for its outsized earnings moves. And then on Thursday, we do have Adobe, so a few of the major players in terms of earnings this week. Now, in terms of the strategy rules here, guys, let's run down the quick strategy rules before we get into last week's top 5 options plays. And we're going to go over these very simply. If you haven't seen my video, my 30-minute video where I go in depth into these strategy rules, how I pick my stocks, how I pick my strikes, and pretty much a very detailed explanation of the strategy as a whole, I'll leave it in the top right corner of the video right now, and I'll also link it down below in the video description. So if you haven't had time to watch that video on how the strategy works, definitely have a look. So in terms of the strategy rules, guys, very, very simple. We're going to go over these quickly. Number 1, need to be writing puts on a very solid company. On the channel, you'll never see me writing puts on anything less than an A+ company, right? We really go for solid companies that have solid fundamentals and that are printing cash pretty much, right? We really want to avoid any companies that are running high amounts of debt, or any companies that are pretty much net margin negative right now, especially in a high interest rate environment. So the focus is on quality companies all the time, guys. Never, never, never write any options on a stock that you do not want to own. It is rule number 1 for a reason, guys, because if you get assigned at a company that you don't have high conviction in, thereafter managing the position will be a little bit emotionally challenging, especially if you don't trust the stock that you're buying, right? Now, number 2, we always want to be writing short puts here in stocks that are in long-term monthly uptrends or at least long-term ranges. All of these strategy rules have the same goal. We're just trying to put all the odds in our favor to not be assigned. So if we're always writing at an monthly uptrend or at least a long-term range, it just goes to show that long-term bulls should be in our backs and we should be able to ride the stock thereafter on a little bounce from a support area. Number 3, company needs to have no earnings this week here, guys. Earnings are a very, very volatile event, right? Just take a look at CRM and a number of other companies that have reported earnings this week that have really plunged 10-20% after, right? Very, very, very dangerous to be writing short puts leading into a company earnings. So that's why I never advise anybody who runs this strategy to write any puts on earnings this week. It's just a recipe to lose money very, very quickly if you don't know exactly what you're doing, right? So very, very key point here to avoid. Number 4, we want to be writing stocks in an area of support or breakout retest, just for, once again, to have the least amount of probabilities to be assigned. So an area of support, guys, pretty much goes without saying, right? Could be a lower area of support right this. So whenever we see a big area of support like this, we always want to be writing puts in the lower bound of the support range. Now, in terms of a breakout retest trade, very, very simple. The breakout retest trade is one of my favorite trades as well when we're very, very range bound right here. And then we get a weekly uptrend. We break out of the top end of a large zone of consolidation and then retest the top end of the range as support. This is known as the retest trade. Breakout, retest, and run. Very, very high probability trade as well. So most of all the trades you're going to see on the channel are all trades in a support area, or at least an area that is a breakout retest trade. Now, these two next points go hand in hand. We want to be writing at or lower than an expected move, guys. If you don't know what an expected move is, you can just head to this website right here, optionsai.com. An expected move is basically Wall Street's probabilities of how high or how low a stock can go in a given week. So our goal is to really be writing short puts under the lower end of the expected move, because moves beyond this point become very unlikely at a certain point. That's why we always want to target under the expected move to be writing options. That goes in line with writing on red or flat days. You'll very rarely see me write any short puts on a stock that has a big green day. That's just because it ties into the previous point, writing at or lower than the expected move. So if a stock opens, like we have UPS pulled up right now. Let's say UPS opens red on a Monday, then it'll give us an opportunity to be writing even lower than the expected move, right? If the stock starts pulling down towards the expected move, we'll be able to write even lower strikes. So that's why these 2 points are very, very important to go hand in hand. We don't want to chase the market to the upside. We want to wait for the pullbacks to come into our areas and then write even lower to even lower the probabilities of us being assigned. Now, number 6, we want to be writing stocks between 0.5% to 1% in weekly premium. All that means here, guys, is if we're looking at an options chain right now, let's say we have Amazon pulled up once again, right? So if we're looking for 0.5% to 1%, what does that mean? We're just looking for the amount of cents versus the strike price. So if we want to go 0.5% per week in terms of premium, in terms of ROI, right? Well, 0.5% would be at least half of this strike price in cent increments. Let me do the math so you guys understand, right? So let's say half of 180 would be about 90, and we want to see about 90 cents on the bid here. 0.9 divided by 180 is about 0.5%. That is your ROI per week. Now, why do we always write between 0.5% and 1% in weekly premium? Just because after so long, guys, after running this strategy for about 4 or 5 years now, I have deemed it to be the juiciest location in terms of ROI versus the amount of cushion that you have away from the strike price. If we go too low on the strikes, guys, there's not enough money there. And if we go too close to the current share price, let's say we go with the 185s, which is pretty much right on top of the share price right now, the premium is super juicy, but the risk of assignment is quite large, right? Because we're so close to the strike price. So if we always respect the 0.5% to 1% rule in premium, it gives us enough cushion while at least giving us some good ROI for the week. Now, lastly, we want to take profit at 90% of the contract value, just because of the beauty of this strategy, guys, is the fact that it is so passive. Usually you're only writing your positions Monday and Tuesday morning, maybe for 10-15 minutes, and then you just walk away and let the time decay do the rest of the work on the options. So since we won't be at our computers 8 hours a day, Wednesday, Thursday, and Friday, just set a take profit at 90% of the contract value. Should be able to get out of the trades as soon as they run a heavy profit without too much active management. Now, if ever our stock gets assigned, so if ever the stock price ends under our strike price for the week, we will have to buy the shares. Thereafter, we will be writing covered calls on the position here, right? Covered calls, the exact same rule. We want to be targeting between 0.5% and 1% of weekly premium on these call options. You can see the at the monies for Amazon. Let's say for ever which reason you got assigned on Amazon at 185 last week. I know it's not probable because of the price action, but let's say you did. Let's say you have the shares at 185. You just write covered calls on these, right? And you can see how juicy the covered calls are when we're pretty much at the money, right? So that's very, very simple. If we get assigned, we're writing covered calls at our assigned strike price or one strike higher. One strike higher is very, very simple, guys. Just in the event, let's say I'll take Amazon, for example, again, right? So let's say for which reason we got assigned on Amazon. All right. And let's say we get assigned on Amazon at 181. I know this is a Wednesday, guys, but just for an example, let's say we get assigned at 181 on a Friday, and then on the Monday, it gaps up, right? And give us a nice juicy reward. Well, we don't have to write the 181s. Maybe at that point, we can write a little bit higher, the 182s, the 183s, and get even more profit out of the contracts, right? That's why I say that usually when we get assigned on covered calls, very, very simply, guys, you want to be writing at your assigned strike or one strike higher if ever on the Monday or Tuesday session, the stock really has a nice move above our strike price. So hopefully all of that makes sense, guys. Very, very easy strategy in terms of that, right? Now let's go over the top 5 options plays of last week, and they were all winners once again here, guys. So the first play of last week was Amazon. We were looking for Amazon pretty much as of the most recent Friday session after we filmed the video, right? We were looking for Amazon below the expected move of about 172.50. And I'm happy to say here, guys, that because of the dip that we had on the Monday morning session, as a matter of fact, those 2 strikes did open up. Number one, if you were a little bit of an aggressive bull, the 175s were available pretty much all day for some juicy premium. But if you're a bit more conservative here and looking for the expected move, 172.50s were available early on the Monday morning trade. So if you were able to pick up either the 175s or the 172.50s, you would have been 100% profitable because Amazon just rallied thereafter. So very, very juicy trade. I took this trade in my own account last week and showcased the position all throughout the week in our daily market recaps. Now, moving on to the stock number 2 from last week was AMD once again. We've been playing AMD pretty much for the past 3 weeks in this lower bound range. Now, the expectation for last week coming after this Friday's candle right here was that we wanted to go below the expected move. We were looking at the 157.50 area on AMD, which was well below this range of support. Now, happy to say once again here, guys, that with the volatile move that AMD had on the Monday session, it did indeed open up the 157.5s, and I did trade them in my own account, which once again was showcased all throughout the week in the daily market recap videos. So 157.5 was available. Very very happy for everybody that was able to get the 157.5, and even the 155s were available for 0.5% on that big Monday or Tuesday drop here, guys. So if you got one of those two strikes, 157.50 or the 155s, you once again would have ended 100% profitable as AMD moved higher thereafter and closed well above our strikes. So congratulations to everybody who took that trade as well. Stock number 3 we were looking at here, guys, was Palantir. So Palantir had been pretty much range bound in the lower $21, $20 range for pretty much the past month and a half, right? So once again, last week, after the Friday session, we were pretty much looking for a move down for Palantir into the 20.5 region, which is really close to the bottom end of this range of support. And happy to say here, guys, that on the Monday session, the market gave us a gift, pulling down pretty much into the lower $21 range, which did free up the 20.5s for the 0.5% rule. You could have been able to get at least 11, 12 cents on these. So I was able to see those contracts, but since I already have a Palantir position, guys, I didn't add more. But if anybody did have the opportunity to get these, very, very juicy trade, as Palantir obviously moved a lot higher thereafter. So very nice 100% win on this trade as well at the Palantir 20.5s. Congratulations to anybody who would have taken that trade. And now trade number 4, guys, was Square. So Square, once again, we have been targeting pretty much the lower $60 range for quite some time now. We've been playing this stock pretty much 2-3 weeks running at this point, right? Lower $60, very, very strong range of support. It's the top end of the range of support, which goes down to about 53, but still, nevertheless, very, very strong area. And the ones we were counting on was these guys right here, the early February support zone, to really act as a backstop for these markets. So Square, where were we looking last week? We were looking for the 61 $60 puts. So right down here, 61 and the $60 puts. And I'm happy to say, guys, that after we filmed this on the Friday session, Monday and Tuesday being very, very flat days, did indeed, guys, open up the $61 strike. Personally, myself, I went with the 62s, a little bit more risk on, but the 61s were available for some decent premium on the Monday or Tuesday session. So very happy with this trade as well. Square thereafter pretty much just moved higher throughout the week. So anybody who would have wrote the 61 or maybe even $60 contracts, if you're a bit more conservative, they would have ended pretty much worthless. You'd have had 100% profit again too. So very, very happy for everybody who took this trade. And now trade number 5 here, guys. Trade number 5 was Fortinet. Fortinet, one of my favorite cybersecurity companies, just because of the amount of net margins that they have and the consistency in their APS and revenue growth. That being said, guys, Fortinet, we were looking last week in the lower $58 range, $58, $57. It is the start of a larger area of support zone right here, right? And that is what we were looking for, guys, looking for these previous weekly bulls right here to really defend this lower $57, $58 range. And they did so beautifully last week. So take a look at Fortinet here, guys. When we filmed the video was pretty much this was the last Friday candle. And we were looking for a little bit of a dip Monday and Tuesday morning. And the market did give it to us, guys. We really came down into the lower $58 range, which did free up the $57 strike for a lot of people, which is exactly what we were looking for here, guys. So I did this one in my account specifically, $57 puts, and very happy with the result, guys. The result was pretty much ending 100% profit as well, since Fortinet pretty much moved higher the remainder of the week. So looking very, very good, guys. Another win in the books for us. That's pretty much everything for our last week's 5 trades. So hopefully you guys were able to make a little bit of money on that. Now, let's get into this week's top 5 trades, and you'll see that a lot of them are very similar, guys, because once again, they are still in areas that we are looking to pick these stocks up, right? That is why you'll see on a recurring weekly basis, I'm not going to change up the positions, guys, that much if they're still in the areas that we want to buy them in. That's why a few of these have been recurring for the past 2-3 weeks running. So number 1, right? If something is good, why change it at all, right? So stock number 1, once again, is going to be AMD, but I'm going to give you guys another semiconductor play just in case this one is potentially not for you, right? So AMD, once again, what are we looking for here, guys? I want to be writing puts below the $160 mark. I do believe AMD is on a very nice trajectory right now, trying to reverse this into a weekly uptrend, trying to set the weekly higher lows to potentially run thereafter, right? So AMD, not looking too bad at all. This previous area of support, this red box, is a huge location of support for the bulls. Now we are a bit above that range and a bit above the moving averages as well. But since AMD is a very volatile stock, we can still get some very juicy premiums. So the expected move for the week is 160.54. So our goal is to get even lower strikes than 160.54. So let's have a look here on the options chain. what can we find below the expected move to be able to write for the week? So in terms of AMD, we want to be writing obviously below the 160s. Now, you can see that there's two strikes available. The 160s, which is below the expected move, technically, right, towards the lower end of this range, the 160s are trading for about $1.12. So it does respect our 0.5% rule. We would need to see at least 80 cents on the bid here for that trade to make sense. The 157.50s, even though they're paying 67 cents, it's just not enough, right? So what I'd be looking for on AMD is, let's say Monday or Tuesday morning, we have a little bit of a dip on AMD and maybe try and retest these moving averages right here, talking about 165, 164. If we do have a little bit of a dip down to this region right here, that will undoubtedly free up the 157.5s, maybe even the 155s if it's a very volatile day in the markets. So the two strikes that I'm going to be looking for this week, being conservative, considering the fact that we have such high news catalysts this week, right? The strikes I'm going to be looking for specifically is 157.5 and 155. I'm going to be waiting for AMD to potentially come down into me and try and open one of these two strikes, which is well below our area of expected move and below this previous area of support right there. So that's the trade that I'm looking for on AMD. Now, another semiconductor play that could be interesting is ON Semiconductor. ON Semiconductor is doing a great job of really hovering above this massive area of consolidation that I've labeled with this green box, right? $70 all the way down to about $60. This $10 range right here is where we want to be playing off of. Now, what is it trying to do? We are trying to set up for the weekly higher lows for the weekly trend change, right? On the monthly as well, the monthly is a very nice tight range of consolidation, right? Just looking to potentially break out higher with the rest of the semiconductor industry throughout the year. So this is why I like this area, number one. Now you do see that this area has been a very strong area of overall support pretty much ever since the end of the month of April. So about a month worth of support. And this is really where I like writing the stock, $69, $68. That being said, expected move for the week is $69.22. So let's go in the options chain and see if we can find any short puts to right here below the expected move of 69.50-ish. So let's have a look here. ON Semiconductors, below our expected move, should be targeting the 69s or better, right? As you can see on the 69s right now, guys, a lot of premium. There is actually 60 cents of premium, which is closer to our 1% rule. So that, even though the premium is juicy, guys, it is still a little bit close. We want to be going as low as possible only because it could be a very volatile week, right? So for ON Semiconductor specifically, I may be looking for the 68s and 67s. If we do have a little bit of a drop here early on in Monday or Tuesday morning session, bringing us down $71, $70 range maybe, that will undoubtedly, guys, give us an opportunity to trade the 67 or the 68s, and who knows, maybe if it's a really bad Monday or Tuesday, let's say, and we drop right into 69, that may even free up these $66 puts. So the goal here is to get as low as possible in this region while still respecting our 0.5% rule. Just a quick reminder, guys, since we're in the $60 range, you should be looking for about 35 cents to be writing these options here on the bid. So hopefully that makes sense for those two semiconductor plays. Stock number two, once again, is going to be Amazon. Amazon's been a recurring member of the top 5 options stream now for about 3 weeks running at this point, because it's just such a juicy trade right now. Prior monthly resistance, now going to be acting as support since we're above it, and the bulls are in full control, right? Full control of the weekly uptrend as well. So even if we get a little bit more consolidation at the top end here, guys, not going to be a bad thing for Amazon too, right? Huge level of support down here, 180 down to about 175. So I really like playing this whole 180, 175 location right here for some support. So in terms of Amazon, the expected move for the week is 179.84. So right below 180. So let's go have a look in our options chain here. Can we find any premium available below the 180 strike? So let's pull up Amazon and have a look together. Now, in terms of Amazon, you can see right here, for the 180s, you can find about 84 cents. The problem with that is it's ever so slightly above our expected move, right? So what we need to see from Amazon this week is a little bit of a dip. So Amazon, what are they trying to do, right? Daily downtrend right now, engulfing move, trying to set up for the daily trend change. Eventually, they'll have to go for the daily higher low to set that trend change. So if we do have a little bit of a dip here down into our moving averages, maybe into 182, 181, getting closer and closer to the expected move on Monday or Tuesday, well then, guys, that may definitely free up the 177.50s or even the 175s, depending on the velocity of the move to the downside, right? And how much it actually pulls back down in here. Obviously, if Monday or Tuesday, we drive down into the 179, 178, then that may even free up the 175s. So the strikes I'll be looking for on Amazon this week, just to stay a little bit conservative here, guys. Once again, because of how volatile the week could be on the Wednesday session, I want to be targeting the 177.50s or the 175s as low as possible while still getting 0.5%. For 0.5% on this one, guys, you need to be looking at least for about 80, 90 cents. The true 0.5% rule would be about 90 cents, but even 80 cents, if we can get a conservative 80 cents on a very volatile week like this, I'll probably take this trade, whether it's on the 177.50s or the 175s. Hopefully that makes sense for you. Stock number 3, guys, is once again going to be Palantir, and Palantir is kind of running away from us. So this is pretty much the last area that I'm interested in playing Palantir in. If we start really running away from us, I'm not going to be recommending to write short puts on this stock here, guys, if we really start ramping away and don't build some support areas lower right here. So this is one of the maybe last weeks that we can play Palantir in the lower end of support, especially if it starts running away. Now, if it comes back into us, then we'll have some more options, but I do love playing Palantir more specifically in the 21.5 down to about $19 region. So now that it's running a little bit away from us, guys, it could be one of the last chances to be writing some options here for that process. So in terms of Palantir here, guys, very nice daily uptrend, looking to set the daily higher low to maintain the daily uptrend. Now we're above all the moving averages and we're above our 2250 most recent range of support, right, for the price action. That being said, we're going to be running to write short puts below 22.19. So in that case, guys, maybe we're going to be targeting the 22s or maybe even the 21.50s, which would be all the way down here back into our range of consolidation, right? So let's go see, can we find any premium on Palantir options down here in the $22 range or at least the $21.50 range lower into the support zone. So moving into this, guys, you can see that for the 22s, we are actually getting some juicy premium, about 16 cents if the stock were to open like this tomorrow. And on the 21.5s, well, we should be getting at least 11 cents on the bid to get the 0.5% rule. So it's not there yet, only the 22s. So what we maybe could be waiting for on Palantir here is if on Monday or Tuesday morning, we have a drop bringing us maybe down into 22.70, 22.50 even, down into this green box all the way down to about 22.30, right? If you get a little bit of a retest of this location right here, that will free up some premium on the 21.5s. That is the type of trade that I'll be looking for on Palantir. 22, in my opinion, although it's a good strike, guys, just because if we didn't have this week like this, I would probably be going for the 22s and being a little bit aggressive with it. But since we do have these events right here, I'll be looking to be a bit more conservative. I'll be waiting for a potential dip on Palantir down here into the mid 22s and then probably be riding the 21.5s. Just a quick reminder, you should be looking for about 10, 12 cents on the bid for this trade to make sense. So hopefully that is clear for Palantir. Trade number 4 right now is going to be Fortinet, one of my favorite cybersecurity plays that was featured in last week's top 5 as well. And Fortinet's pretty much the exact same trade as last week, right? So just because we're coming into this very nice area of support, the 200-day weekly moving average is right down here at about 52. So in my opinion, guys, even if we were to get signed over at the $56 level, the downside is not that bad in my opinion. Maybe even be able to revisit the 52, 53 worst case scenario. That's why I'm fine with writing short puts at the higher end of this range of support, really using the top end of this support right now. So in terms of that, the expected move for Fortinet for the week, guys, is about $57.93. So let's call it $58. So let's go and see, guys, can we find any premium lower on Fortinet than about $58, right? Just a quick reminder, Fortinet is in a pretty much a weekly downtrend right now. So we're going to be trying to look for this to be pretty much our bottom location, look to bottom out on the monthly as well as we go for this eventual monthly trend change. So that's the trade idea I'm targeting if ever we're assigned, right? So in terms of Fortinet right here, let's have a look at our weekly premium and see, can we get some good premium below our expected move of $58, potentially 57, maybe even 56 for the week, right? So let's take a look at Fortinet right here. You can see we have the options pulled up and you can see, guys, unfortunately, we only have the amount of required premium at the 58 strike for 33 cents, right? 57 is just not enough premium. You'd need to see at least 28, 29 cents on the bid here for that to make sense. So 57 and 56 are not yet available. So what we need to be patient with this week, guys, is if Fortinet can have a little bit of a dip here into the Monday or Tuesday morning session, maybe pulling us down into the 58s, right? Mid 58s, that in turn should be freeing up the 57s, maybe even the $56 strike, depending on the size of the move, right? Obviously, if Monday or Tuesday is a very bad day for the markets and we come down into the 57 level right away, well then guys, we're going to be riding even lower, 56, maybe even 55. As low as we can get, guys, while still getting 0.5%. So my range that I'm targeting this week for Fortinet, depending on the size of the Monday or Tuesday move, is going to be 57 all the way down to about $55, the lowest I can get while still getting juicy premium. Now, the last stock that we're going to be looking at this week is CELH. And full disclaimer, guys, this one moves very, very quickly. So it's a more volatile position, but still a very strong company, which is why I chose it. And the reason I chose it as well is because there's a very juicy location of previous resistance that should now be acting as support. The 50 EMA is down here as well. And we are pretty much in a bit of monthly consolidation right now. You can see this support range right here is even more clear on the monthly. The 12 EMA on the monthly is there as well. And this stock usually has respected the 12 EMA fairly well all throughout its rally. That being said, it does move a lot here, guys. Take a look. I mean, this stock is known to be very, very volatile, but is a very solid company. So the expected move on CLH this week is about 68.85. That is a fairly good cushion away of about 6% to the downside. However, we want to be going even lower than our prior support. We want to be getting as close as possible to this green box, guys, 65 to about $60. So let's go see, can we find some juicy premium below our expected move as close as possible, guys, to about $65 on CLH. And because this one is a bit more volatile, usually we do find some good premium, even if we go very, very low, right? So let's take a look right here at the CLH options for $66 and maybe even $65. And as we can see right now, even though it's 73.20, we're targeting 65 right here, right? 66, 65, which is our 200-day moving average and lower, right? So as you can see, look at these options premiums, guys. Very nice indeed, right? $66 to $65 is currently paying about 0.5%, right? Actual 0.5% is 66. So what could happen potentially on CLH is if we get a little bit of a drop here on the Monday or Tuesday session, bringing us down below into $70, maybe even $69, that may free up even lower strikes, guys. Think 64, 63, 62, as low as we can get while still getting our 0.5% rule. And this is why 0.5% to 1% is extremely important as a rule here, guys, right? You can see the expected move is about 68.85. And if you were to try to write the 69s, look, over 1% in weekly premium. It could look very alluring, very attractive, and the premium is very juicy, right? But it's a double-edged sword. Be very, very careful, guys. This one is known to move, and usually when you find so much premium close to the share price right now, it is potentially a trap being set by Wall Street. It just means that they have no problem potentially coming down here and assigning you. That's why we want to go even further than the expected move down and really base our support levels off of the 0.5% rule, especially on a very volatile stock. If you go too close, guys, you're going to get burned. This one can move, and the support area is really starting 66, 65, so we don't really want to get assigned all the way up here on CLH if the downside potential could be another, $5, $6 per share, right? We'd rather be patient and get it down here in the larger area of monthly support. So that's pretty much everything for our options plays that I have for you guys for this week. Hopefully you guys enjoyed that. There is still a number of other stocks that I'm always keeping my eye on, guys, except the fact that they're not that volatile, so we need big moves down. UPS, I like UPS in the lower 133 range. The only problem is that it's not very volatile, so you can't really get much premium lower than you can't really get much premium. Look, I mean, UPS, if we pull up the chart right here, right, 137.64, look at how weak these options premiums are for UPS, right? If you want to be targeting 134, which is not that far below the stock price, right? It's only about 2% to the downside. Look, we can't even really get much premium here, only 39 cents. You need to see at least 70 cents on the bid here for this trade to make sense. You need to go as close pretty much as 136. It's just too close here, guys. So UPS, I'm really looking for maybe a 3% day to the downside, 2-3%, and then looking to right very, very close to wherever the bottom of that daily move is, 131, 130. So that's why you have to monitor these ones. Since the premium is not that juicy, you have to wait for a big dip. Now, another stock that I'm looking at all the time is SoFi. SoFi, I love writing short puts in the $7 range, even as close to $6.50 as possible. Even if we're a little bit in the money right now, usually some very good premium. I'm just looking to build a position and potentially looking to ride it back here, $7.50 all the way up to maybe $8 range, right? So SoFi, always one that I'm looking for on a weekly basis. Robinhood, even though it's run away from us a little bit, the premiums are really good on Robinhood, potentially looking for eventual weekly higher lows. So if I can find some premium down here in Robinhood, maybe the $19 range, that's going to be one that I'm going to be playing in the short-term future as well. CRM is always one for consideration, guys. If we eventually get this weekly consolidation, trying to set the weekly higher low, and we revisit, maybe if we revisit, guys, the 230 to 220 location right here, I'm going to be looking to write short puts 225, 220, but we're just a little bit too high for that right now. Another one always up for consideration is Airbnb. Airbnb, I love writing Airbnb, 142, 140. It's just the premiums right now are not the best. We need to get a little bit closer to this location right here to really be able to write the 139s, 140s. So that's always one that I'm going to be watching quite closely as well. And another one that I'm looking at very closely this week too is Alibaba. Alibaba looking to retest this prior range of resistance and now going to be using it as support. So the whole 77 down to about $75 range is a sweet spot for writing puts as well. So there's just a few additional ideas. Another one that I've been playing a lot over the course of the past couple of weeks, Square as well, the lower $60 range, 60, 59, just banking off of this previous support to be acting as support once again. Square, $61, $60. The one reason that I didn't take it this week here, guys, is just because we have a market moving event, and being a fintech play, it is quite sensitive to any comments on interest rates. So it could be fairly volatile, but after, if we get a little bit of a dump down here, I'll probably be playing it a lot next week. So there's just a few names that I keep an eye on a weekly basis. Obviously, guys, there's a lot more than that, right? You guys know me. I go through about 250, 300 names every single week, trying to find the best plays that have good options premiums, right, at big levels of support. So hopefully this video was educational for you guys. That's pretty much everything I had for you. If you liked it, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you here. We do these videos every Sunday night. And then thereafter, guys, if you have any questions at all in terms of the strategy, or if you have a stock that you're looking to play at, if you have another options play that you want a bit of my opinion on or something like that, leave it down below in the comments and I'll be very happy to answer you guys. Usually get back to you within the first 24 hours. So take care, guys. I'll see you tomorrow for our daily market recap after the close. Take care and peace.